Is the stock market about to crash? Hi, it's Charlie giving you Saturday's video and recording this on Saturday as well. Right, I've got a chart up here of the S&P on a weekly time frame. And so what we're going to do is have a little bit of a look at the technicals here, but before we do that, we're just going to have a look at some other stats as well. So what I've got here is the stats going all the way back to 1932 by calendar month to see which month has the best has given the most lows for the S&P since 1932. So we can see that actually October has given the most months or the most frequencies of actually a market putting in a low there. So although October's can be traditionally quite a weak month, as far as historical crashes are concerned, because we have had a few in the month of October and September, it also can be a month that marks a low. So just bear that in mind here. Now, there are other measures that we've seen recently from a sentiment perspective that do give some caution towards the downside. And those are, and I'm going to present the case for the downside in a moment as well. And that's the American Association of Individual Investors, which had got to some of the most bearish extremes on record just a couple of weeks ago, prior to the bounce that we had just the earlier part of this week here. This is the daily chart now. So and there's many more, and so we'd seen that hedge fund positioning had got extremely bearish as well to historical sort of lows from the last sort of 15 years as well. So now, could it be that was enough? What I've just given you there was enough to provoke that really strong bounce at the beginning of this week, before but then that's it, and then we're just going to roll off. So is this it now? And we're about to go to those new lows. Now, let's go back out to the weekly chart first of all. Now, one thing we've got this month is earnings, US earnings, haven't we? And so my suspicion is that a lot of companies are going to be having to readjust their forward guidance in light of the inflationary pressures having impacts not on all, but on many companies' bottom lines. And so that could act as a headwind to the stock market here. So that certainly could. And from a technical perspective, if we come out to the monthly time frame, the S&P has had this year where it's been just pretty much relentless on the way down, or I say relentless, but there's been decent bounces along the way. But nevertheless, it's a one-way street this year overall. One thing to note on that, going into the final quarter, that with stocks being down, let's call it 20-25%, historically, again from a stats perspective, that historically, if stocks are down 25% going into the final quarter, usually the final quarter ends up positive. So just bear that in mind as well. Because just bear in mind, even if this stock market is still going to go lower, so if you are bearish on stocks, it is still possible that we bounce first before coming back down. So anyway, let's now I've presented a few factors that could produce a bit of upside, and also this weekly chart here as well. Prices come down to weekly 200 moving average, a key level that lots of investors and traders look at. And we got this bounce this week. It was a ferocious bounce at the beginning of the week. It was setting itself up for a key reversal week. It never happened, so that's something to note there. However, this is an inverted hammer candlestick as well. So we have got an inverted hammer here at the end of this week. So ironically, that is still a potential reversal signal here, reversal to the upside, even though it's given back a lot of its gains. So we are into support, and it's a similar sort of situation. If I go down to the Nasdaq here as well, it's a very very similar sort of looking chart there around its weekly 200. If I can find the Russell 2000 double bottoms on the weeklies, it's not got enough data on that one, and there's the Dow as well, just around that 200. So they're all very similar. If I take this back to the S&P 500, so the going forwards into this next coming week, we've got the big main event is Thursday's CPI inflation. So that's what's going to be by far the main event. So yes, the potential is there that with the Fed putting their foot to the floor and saying doesn't really matter what the unemployment report is going to be like yesterday, Friday, and we're going to carry on. Even if that had have come in softer, we're going to carry on. And likewise with inflation as well. The markets got a little bit spooked there yesterday on the back of a lot of Fed speak this week, all saying the same thing. And then that employment report, it wasn't like it was a spectacular report, but it still came in pretty much as expected. The unemployment figures reduced a little bit, and it was enough to really start to gear up that selling. So I wasn't expecting to see as much selling as we got, so I wasn't involved in any of this. So anyway, going into next week, we're looking at Thursday being the main event. So then it comes down to how you want to go about positioning this. And if I bring the pen up here, what we would need to see in the early stages of next week would be, if it happens, would be just to see if the stock market just bounces a little bit into the early stages of next week. So, and then, if you're bear, you've got choices. You may already been have sold. There were technical reasons to have sold up here into the daily 20. But if you're not, and you're thinking, I really want to sell this market, and you've not as yet, then you do have options. You can either sell on a break of Friday's low. If you were going to, technically, that would be something that traders would do. You could just let the dust settle, and if it does bounce a little bit, let it bounce if that's what's going to happen. And again, wait for Thursday and then put some orders in below price on Thursday and see if it triggers you in then. Now, the flip side to that is that you might be bullish and looking at this and saying, well, actually, yeah, there's a weekly 200 here. Prices there's divergences and all sorts going on. There's trend lines as well, and so you might come out to this monthly chart and say, well, look, we're sitting right on top of the monthly 50, although that's been tested several times. So you might actually be looking at it from a buying perspective as well. So again, if you're a potential buyer, and you're bullish about this market, saying, well, there's a lot of negative sentiment out there, like I've talked earlier on, then you don't have to just try and buy it into a big falling price action like this. You don't have to. What you can do, you could be buying it here and then putting a stop somewhere below the low, of course. You could be doing that. Or you could, again, wait for the dust to settle, much like the bears, and say, right, okay, I'm going to wait and see if we get a couple of, inside bars, just a bit of chop trading, and then put an order above whatever that range is going into Thursday. So those are the sort of things that you could look at. There are various things depending on aggression levels on how you want to approach the markets. But coming back to my original title, is the market going to crash next week? I think that when you have major events such as those inflation reports coming out on Thursday, the potential for large moves is certainly there. Now, the thing is with that inflation report is that the potential for large moves come in both directions, both yes to the downside. So if the inflation report comes in strong, then we could see a really strong sell-off. And I think you could end up seeing a lot of people throwing in the towel because we are at these key levels here. And so if that inflation point did come in stronger, you could see a very strong selling come in. However, if the inflation report doesn't, all of a sudden the risk trades could switch around on a dime, and you could end up seeing some pretty strong upside moves, just like we had at the beginning of this week. So it's never cut and dry. You have to make your mind up as to how you want to approach this market based on the views that you have, and taking into consideration the technicals, the fundamental picture, and the sentiment. And even if you are a bear, let's say you're a bear, it's possible that the market bounces, and there's nothing wrong with being wrong. But when it comes to the markets, we can be right in the long run on our analysis, but in the short term, anything can happen. So we could just carry on chopping around. This could create an indecision, and we carry on chopping around for a few weeks. So and likewise, if you're a bull, you could be right, and maybe we're going to have an up move, but maybe the market carries on chopping around and just moves marginally lower, and so you're overall right, but not necessarily in the short term. So it doesn't matter what your view is. Timing is key. So if you think the market's going to go lower, then use the technicals, use your risk management to then make a stand as to at what point you want to be short if you're not already. And likewise for the bulls out there, make a stand, make a plan for how you want to be long and when you want to be long, and that's the most important thing. Anyway, have a lovely weekend. I shall see you in the middle of next week.